We're going to talk today a little bit about market fractals. It's essentially a Fibonacci lesson here. However, I'd like to concentrate on fibs maybe tomorrow as a different lesson. So today, what I want to do is expand on yesterday a little bit in terms of how to define the trend, and then understand how we can use these market fractals. So one of the best ways that I've heard of what is a fractal is basically if you went to an art gallery and looked at a picture, and you could see all the details of a picture within one little pixel of that picture. If you could see all the details of the greater picture within that one pixel, that is a self-similar building block, so to speak, for that picture, right? I hope that makes some semblance of sense. So in other words, if you relate that to Forex, the smaller time frames are simply self-similar building blocks, aka Lego blocks, thank you, for the larger whole. Alright? So this is helpful to us because we can use these smaller building blocks to help mitigate our risk a little bit and be a little bit more fine on our entries around the longer terms. Alright? So in other words, my trade plans are predominantly based on a daily, weekly, and 4-hour chart. However, the execution is handled more so on a 15-minute basis. All right. So if we remember our little trend change patterns essay, so we'll put them to the side there a second. So one of them was the lower high, lower low pattern. These are bullish to bearish patterns. The other one was the double top, and then a break of this low. And then the other one was the break of the two swing lows, or something like that. Right, break of the two swing lows. That would be the bullish to bearish, and then conversely said to the downside, bearish to bullish here. That's a little double bottom, break of the lows. There's a little higher low, break of the high. And then we also have where we break the last two swings. So this one. Okay, and price sort of pulls back and continues. Alright, so there we have our little 6 chart patterns of change of trend. Alright, now these little trend change patterns are accurate on everything from a monthly chart down to a 1-minute chart. Alright, now they are more reliable, as with all trading. They're only as good as they are until they're not good, right? They only work until they don't work. They are, in my opinion, less reliable when you go anything from a 15-minute down. I tend to take these things a lot more seriously on particularly a daily and a 4-hour basis. A 15-minute is helpful, but you can change trend several times on a 15-minute without necessarily changing the overall direction of where price is going. Alright, but that's a discussion for another day. Okay, so how can we use these smaller self-similar building blocks to trade larger whole? Okay, so if we look at our fibs, right, and if, like I said, we'll do a more complete sort of fib lesson tomorrow, but if we're looking at a fib here, if this is our swing, and we just talk, I want to introduce our zones here, right? So between the 382 and 50% is of a downtrend would be 382 to 618 would be our red zone. In other words, where price would probably head to the downside. And said differently, the 382 to 618 of a swing rise would be our green zone, right, where price would typically rise on. Now, I'm watering this down and making it way simpler than it is in practical application, but we're going to use, throughout this little lesson series, we're going to look at examples and it'll become clear, but for the time being, we need the basic knowledge. Okay? So now it's a case of saying, if these red and green zones were potential turning points, all right, and let's say these were daily charts, all right, then it would be a case of saying, right, if these are potential turning points, then we could watch the shorter term definition of trend around these zones to give us a more zoomed in view and confirmation, so to speak. Confirmation is a loosely used phrase, considering that there's no such thing as confirmation in trading, right? It's all speculative on some level. But we can use the shorter term time frames and these chart patterns around these major turning points. All right, these turning points are also set differently, support and resistance, to confirm if price is rolling over in a certain area. Okay, so this is how we do this. All right, let's say that we have a daily chart. All right, I'm going to clean this up. Okay, and try to squinch all this up here if I can. All right, let's say we have a daily chart, and price is making a series of higher lows and higher highs. Okay, and it's come from a little downtrend, it's changed direction, etc. Okay, making a series of higher lows and higher highs. Alright, now what I'd like to do, so this is a daily chart. Okay, daily. Now what I'd like to do is, now what we're going to do is we're going to take this portion of price here and look at that on a 4-hour basis. Okay, so even on the intraday, this is why I think if you are trading, in my humble opinion, if you are trading one time frame, you're really missing out a lot on the market, because you're going to get blindsided as to when you're trading into longer term and shorter term areas of support and resistance. You only, you put the blinkers on the horse. Anyway, so now this red circle, check that, red square here, rectangle, we're now going to zoom into that on a 4-hour basis. Okay, so now on a 4-hour basis, we'd be in the uptrend. Alright, so making a series of higher lows and higher highs. Okay, and then we might hit an area of resistance on the daily. So on the 4-hour, we would then make our 4-hour change of trend to the downside. Alright, so there's our little change of trend. Okay, so now we have a 4-hour change of trend. However, this takes us to a green zone of this 4-hour swing. And you might have to watch this video back a few times to get the application of it. Maybe I'm jumping the gun without going through fibs in great detail. Alright, but this is a green zone of this rise. Why? Because it's the 382 50% in the previous swing high. This then should precipitate a pullback, but because it is a change of trend to the downside, you expect sellers. This then projects us down to a fib of this entire 4-hour swing, which so happens to be the daily swing here. Okay, at which point, because that is the move fib of the 4-hour, which is your daily swing fib, and like I said, tomorrow we're going to elaborate a lot more on Fibonacci. That then should give us something that looks like a little double bottom or another change of trend. Alright? That then, because it comes off the red zone of this 4-hour drop, that then should give us a fib of this rise after a change of trend, and price resurrects itself to the upside. Alright? And notice here how we had if I can use yellow highlight, notice here how we had our change of trend and our change of trend. So now we've used the shorter term time frames. Oopsie, I deleted all of that. Now we've used the shorter term time frames. We've used the shorter term time frames. I'll just recreate this to confirm the major turning points. To confirm the major turning points on a daily basis. Okay, there we go. I've just recreated the 4 hour. Alright, so here's our little change of trend. Here's our little change of trend. And now we've effectively negotiated the daily rise, the daily turning point, the daily higher low, and it makes complete sense on a 4 hour basis. Alright, so now our next step is basically saying, okay, well, how can we now trade these turning points on a more intraday basis? Because our job as analysts then, day in and day out on a more intraday basis, is going to be, our job is going to be more now, well, where are we in relation to this whole fractal soup? Okay, and said differently, if I said to you, right, I tend to want to swing trade with the daily trend, but spot trade against it. So if we were shorting this, for instance, all the trades to the downside here would all be spot trades. And all these trades in the yellow zone to the upside here would all potentially be swing trades. Because they're coming off the daily support in the direction of the daily trend, confirmed by a 4 hour change of trend. So spot trade against the trend, and then swing trade with it. Fairly logical, isn't it? Okay, so now if I just draw a pink rectangle here, now we're going to look at this on an hourly and a 15-minute basis in that zone. So now we have our daily trend, our 4 hour turning points, and now we can look at this pink rectangle here and look at how that would potentially look like on a 15-minute basis. Alright, so price would be in a downtrend on a 15-minute basis, making a series of lower lows and lower highs. Okay, now let's say it bounces off the bottom and breaks these two swing highs. So this is our daily chart, our 4 hour chart, and our 15-minute chart. And if I've lost you on this, please, I'd ask you to reference the video again a couple times. Alright, so now we have a 15-minute change of trend. However, it has taken us to the red zone of this 4 hour drop. Therefore, we expected to head almost all the way to the bottom, or at least a higher low. Alright, at this point, that would generally reflect that double bottom higher low on the 4 hour, at which point we would expect a higher low there on the 15-minute higher high, which is a resurrection of the 15-minute trend, a pullback and continuation. Alright, so we're getting these 15-minute changes of trend around the daily support, anticipating a 4 hour higher low, which is also confirmed by a little 15-minute change of trend around the major higher low area. Now this is particularly important if you get something like this towards a major market open, or a major psych level, or a major fib level, or a major level on the dollar index. Alright, so this is basically market fractals in a very simplified manner. We're taking the smaller term time frames, we're taking our changes of trend patterns, and then we're interpreting those changes of trend patterns around major turning points of the market, major turning points on a daily and a 4 hour basis. Alright, and in this way we can then set our stops in accordance with the 15-minute change of trend. However, our profit exposure is that of these 4-hour and daily support and bounce areas. All right, so that's kind of the whole thinking behind this. All right, this is why we're using this, and it gives us a shorter-term confirmation of an area presenting a bounce zone. All right, and this is basically market fractals in a nutshell. So moving forward from here, we're going to look at, tomorrow we're going to look at examples of this. We're going to explore Fibonacci a little bit more in detail. We're going to establish a few rules as to when a change of trend is a valid signal to buy or sell versus when it should be left alone. And we're going to start to develop the means of interpreting when or how we can work out where these turning points in the market are. All right, so those are our building blocks from here on out. But this is just a general idea of our changes of trend in the context of the longer term market. And once again, a very generic look. Tomorrow we're going to start looking a lot more at chart examples, etc. So always appreciate your comments. Please post below this video, and we'll talk to everybody tomorrow. Thanks.